warm welcome to everyone joining us. I'm Ryan Smith, and I'm a Partnerships Director on the Financial Institutions team here at EDC. I'll be the host of today's webinar on getting financing for your business. I'd like to begin by acknowledging that we're broadcasting to you from EDC's head office in Ottawa, which is the traditional unceded territory of the Algonquin and Anishinaabe people. We value taking this moment to deepen the appreciation of our Indigenous communities wherever we are, and to remind ourselves of our shared debt to Canada's First Peoples. So, if you're running a business and looking for ways to grow your sales outside of Canada, chances are you're going to need financing. Over the next hour, you'll hear from experts in the field, and they're going to share tips on the different types of financing available, and of course, how to get it. First off, you'll hear from Florence Mazerol. Hi, Florence.
I think I should take myself off mute and say, hi, Ryan. I'm happy to be here this afternoon. Looking forward to chatting.
Great to have you, Florence. Florence is an account manager with the Business Development Bank of Canada, or BDC for short. Florence has spent years assessing loan applications, so she's in a perfect position to provide advice on how to get financing. She'll also talk about the different types of loans available through BDC that can help your company grow. We'll also hear from Constance O'Brien. Hi, Constance.
Hey, Ryan. Thanks so much for having us.
Great to have you. Constance is from Innovation Canada, where she holds the title of Senior Innovation Advisor. Among other things, Constance is going to talk to us about the Business Benefits Finder. It's a powerful online tool that can help you uncover all the various funding, financing, and general business advice that can really help you out. So stay tuned. You'll definitely want to learn more about it. And finally today, we're going to hear from my colleague, Amanda Klukowicz. Hi, Amanda.
Hey, Ryan.
Nice to see you. Amanda is a senior account manager here at EDC, and she's going to walk us through some of the financial solutions that EDC offers that have been specifically designed for companies looking to do business beyond Canada. Many of these solutions are available to companies through financial institutions, or what we commonly refer to as FIs. And if you're wondering why we don't just simply say banks instead of FIs, there is a technical difference. In Canada, there are definitely restrictions in terms of financial institutions accepting deposits, but financial institutions can absolutely lend your company money. So for simplicity, going forward, we're just going to use the term banks to encompass all banks and FIs. So EDC works very closely with banks to help Canadian companies do business in international markets. It's actually a very long-standing partnership. Building a deep relationship with banks is very important to us corporately, and it should be to you as well. Having a strong, open, and honest connection with your bank is critical in the development of your business, and the time to do that is as early as possible. Don't wait until you hit a critical point with your cash flow or capital needs. Get ahead of them. Secure ready access to funds so that when an opportunity presents itself, instead of spending time arranging financing, you can grab a hold of it. If I had to sum it up in one word, I'd say it's all about trust. To lend you money, your bank needs to trust you. They need to feel comfortable about you, and they need to be confident, ultimately, that you will pay them back. They totally understand that there'll be bumps in the road. These last couple of years have been incredibly challenging. So it's really important to keep your lines of communication open. If you think or know you're going to miss a loan repayment, as an example, get ahead of it. Let your bank know. Make alternative arrangements. Never miss a payment, close your eyes, and hope that nobody notices. People will notice, and not in a good way. So if anything is going to happen, if you know something is going to happen, keep in constant communication with your bank. My guess is you'll have questions about how to build a better relationship with your bank. So please send them in. In fact, if you have any questions at all about financing during the webinar, you can send them our way through the webinar console. We've saved the last 15 minutes of today's program for a question and answer period. So it's a great opportunity to get expert answers to all your questions. We've also developed a resource document that you can download from the webinar console. It's full of links to the resources that our panelists will be talking about and many more as well. So be sure to check that out after the program. And with that said, let's get going. So, as I mentioned earlier, Florence is with BDC. And their main role is to provide Canadian entrepreneurs with both loans and business advice. Their website is filled with countless resources, so if you don't already know about them, do yourself a favor and check it out. We've included them again in that resource document. So, welcome to the program, Florence. Very
Thank
happy
you.
you could join us.
So, what would you like to talk about, Ryan?
Yeah, I've got a few things here. I'll start with this. I know that for banks, one of the best ways to get to know a potential client is by reading their business plan. What should you provide in your business plan if you're trying to get a loan?
Well, business plans are imperative for companies in the startup phase. This document gives entrepreneurs a moment to shine in front of we lending partners. Your typical business plan tells us who you are, what you do, how you do it. There's going to be a clear map of costs to startup. That's accompanied by quotes and invoices, and helps us understand what I'm financing, and it allows you to build a budget. So staying on budget is imperative. Along with that, one of my favorite documents, a 2-year monthly cash flow. That's going to show gaps and cash flow needs. As we all know, you're going to hear it time and time again, cash is king. It gives me the opportunity to provide some working capital financing if I appreciate that you need it. Now, what I want to share is if you've been in business for a year and have financial statements, a business plan isn't necessary. What I would do is I'd review your financial performance via those financial statements. I'd look at your personal credit and your net worth. I'd have you prepare a few paragraphs on, of course, who you are, what you do, really important, your experience in business, and your forecast. That would be sufficient for me to know if I have interest in investing in your business. If I do decide to proceed with a loan, I'm going to ask for some more minor documents, such as bank statements. I want to prove your identity. You know how important that is today with so much fraud going on in the world. I'd look at the lease that you have for your premise, and I'll get some quotes for your project.
Great. That's fantastic. Thanks, Florence. You've really kind of identified what needs to be in the business plan. So I guess playing on that theme, in your opinion, what would you say sets a strong plan apart from a weak one? I mean, assuming they cover the essential bases, any tips, best practices?
I've seen an awful lot of business plans over the years. So reframe this. A business plan should not be thought of as your hopes and dreams for happily forever after. It's not a dream document. It should be thought of as a litmus test of whether the business you're hoping to create will succeed or not. Just remember high school science class. Think of it as an experiment. You can translate your ideas into reality. It's your on paper practice run. That's what I call it. Now, if you truly comprehend your business operations, the market you're in, that business plan's pretty much going to write itself. Most templates you have for writing business plans are full of thoughtful questions, and they'll help you formulate your plan. And when you reach that part in your plan where you get stuck, because you're going to get stuck, everybody does, reach out to your network and ask people for their input. Create your own little focus group. Also, a bookkeeper or an accountant will be able to help you with your financial component. And planning is really important because it forces you to give consideration to the areas that you don't have a lot of expertise in and things you haven't really thought through. Oftentimes, we put off to the end in dealing with the things we don't have great expertise. So you want to give extra time to those aspects of your plan, and that's going to be one of your greatest learning tools. I know it can be frustrating, but addressing these issues can be extremely rewarding and can be quite profitable for you. So if you continue to revise your plan, tackle pieces of the business for your future growth, it'll help your company move forward. Another suggestion, you can run that plan again past your friends and family. Take their feedback. It's going to come in the form of lots and lots and lots of questions, and incorporate that into your plan. I knew one entrepreneur who went through 7 different business models, and he found that the first 6 simply weren't viable. He prepared a well-planned business plan, he did the forecast, and he simply realized he was going to lose money. Now, he hit pay dirt on the last plan, built a successful company, franchised it, and sold it for a tidy sum of profit just a few years later. So a business plan that tells you that your business isn't viable is actually an outstanding planning tool. Saves both you and I from losing our investments. So let's just talk briefly about what a solid business plan includes. You're going to have an overview of your company, where it stands in the marketplace. The sales and marketing plan includes your strategies that will be used to target your customers. No, your clients aren't everyone. Your clients are a specific group of individuals who need your product or service. Now, it's really important to know this and not to focus on marketing to the entire world. Marketing budget needs to be spent in very specific places to attract your special customers with special needs. Otherwise, you're wasting your marketing dollars, and we don't want you to waste money. An operating plan describes the physical aspect of your business. Another really important thing to discuss is human resources. That plan details your staff, HR, policies, and procedures. Now, today our world is in a human resource shortage, and some might even call it a crisis. So attracting, hiring, retaining the best staff, always priority. We often hear about businesses having to close their doors, sometimes for short days, sometimes permanently, because they just simply don't have enough staff. So you're going to need a solid plan, and you have to revisit it regularly. Your action plan is your calendar of activities for the next 2 to 3 years. You can build a timeline with these activities to support your plan. So once you have your timeline, multiply it by 3. It's well documented in entrepreneurial startups that it takes 3 times longer than planned to do most everything in business. Your sum up document is called an executive summary. That's a 1-page brief. It goes at the beginning of your plan. It summarizes why you're seeking financing, together with a brief explanation of your business operations. And my favorite document in a business plan is the financial appendix. And that's your facts and figures that back up what you say in your plan. So again, just one point to summarize. If you get stuck in the planning, create a brainstorming page, go through little thought bubbles and little notes, write in point form your ideas. Nowhere does it say that plan needs to be a novel. Point form can often tell us everything we need to know. Ryan?
Fantastic. Thanks. That's great detail, Florence. Appreciate it. One last point just to close us off in terms of business plans. Can you point us in the direction of some of the online resources available at BDC in terms of business plan development?
Oh, certainly. We have an entrepreneur toolkit available online, bdc.ca. Just search under entrepreneur toolkits or resources. On the website, you'll find an entrepreneurial potential self-assessment. Kind of gives you a guide if you have what it takes. You have the true grit and that fire in your belly to be an entrepreneur. There's the business planning template, of course, that we've discussed. There's guidance on how to get a business loan. There's a free loan calculator, information on whether to lease or buy a building. Premise is important. And of course, my favorite, the financial fundamentals course. It's very well written. It's really easy to follow.
Fantastic. Thanks for that, Florence. We'll switch gears a little bit. Maybe can you provide an overview of the different types of financing available through BDC?
Sure. I can organize it in a few different ways, but let's talk about the age of the business and its stage of development. Startup, of course, your first stage. Futurepreneur is a partner of BDC for financing businesses with less than 12 months of operations and can provide up to $60,000. That's $20,000 from Futurepreneur and $40,000 from BDC. And it's a lending partnership. It's been very long-standing. I mean, I came to the bank almost 20 years ago, and I can remember it used to be called the CYBF, Canadian Youth Business Foundation. So the beauty of that partnership, it provides financing to young entrepreneurs under the age of 39. There's not as much emphasis on personal credit or the amount invested. Now, we do appreciate that young entrepreneurs don't often have as much money to invest, and they don't have the long-standing credit track record that mature entrepreneurs have. It's secured only by a personal guarantee. And a really great part of it is Futurepreneur also provides a mentoring component, which is free. So some startups, which are more complex and have great needs greater than $60,000, we can look at those projects outside the Futurepreneur partnership. So we're just simply not limited by amount. Most lending requires 2 years of results. If you go to your chartered bank, they're looking for 2 years. But for strong businesses with good results and owners with good credit and good net worth, we can often provide larger loans for businesses operating more than 12 months, less than 24 months. So there's no limits here on the amount we can finance. It depends on business performance, what we're financing. So these loans can be both secure and unsecure. Unsecure loans are accompanied by a personal guarantee. So good credit and net worth tell us a lot about the strength of your guarantee and your habits on repaying your debt obligations. Working capital loans are used for growth in operations, so you're not financing a tangible asset. So that's an example of an unsecure loan. Another example, your personal credit card carries with it a personal guarantee, but it does not use any of your personal assets like your home as security. So your guarantee is your promissory note to pay. And I want to just take a chance to, I cannot overemphasize here how important your personal credit is in small business lending. Personal credit's not a measure of wealth. It's a measure of your repayment history. So it's really important to pay all your bills on time, because 7 years of reporting history is an awful long time. Now, when I'm financing a tangible asset like equipment, trucks, buildings, I'm going to take a charge on those assets via a general security agreement or a collateral mortgage, and that allows BDC to have a charge on the assets we're financing. Now, these types of loans are often priced better because we have tangible security. So again, another personal example, your personal mortgage includes a charge on your home. If you fail to pay your mortgage, the bank that you financed your home with can seize your home in order to recoup the losses on the loan. So, and also to let you know, BDC does not take personal assets as security. So these types of unsecured and secure financing loan applications, they're taken by account managers like me, who often underwrite loans and send it to an authorizer. So we do have a really simplified solution that might be of interest to our viewers today. If you've got 24 months of continuous sales results and need less than $100,000, we have online loans that you can apply for simply by completing an application. We finance things such as working capital, small wear equipment, leasehold improvements. And of course, it's an unsecured loan, so the only security we take is a personal guarantee. If you want to learn more about our online lending platform, contact me directly. My coordinates will be provided later in resources. I'll set you up in our system. Set your business up as well in the system. I'm going to walk you through the process. I'll provide some how-to documents, some files for ease, give you some tips and tricks on applying, which makes the process move faster. Now, caution about this channel. It cannot be used for companies with complex ownership structures or for changes of ownership. We can do loans like this, but not through the simplified online process. So one of the beauties of this application and this loan, no application fee and no early pay down fee that is carried with many loans. So to finish, it's worthy to note that the size of loan or the tenure of business is no limitation to lending to a strong performing business with owners that have good credit and they've invested in their company. All you need to do is ask, because every loan that BDC provides is customized specifically to the client's needs.
Great. Thank you, Florence. Really quickly, how long does the approval process take for the types of loans you just described?
Online finance can take 3 days longer, depending on how busy we are and if you've provided all the correct information in your application. Again, if you have questions, feel free to reach out to me. I underwrite loans for clients. I usually do my part within a day or so of getting all of my documents. Sometimes documents are a bottleneck because they have to be accurate and they have to be the correct documents. But then, the loan's got to go for authorizing, signing, meeting conditions of the lending, security undertaking, and disbursement. It could take up to 2 weeks beginning to end. And a caution that if we are working on large construction projects, they will take a lot more time. I've had loans go through in as little as 3 days and as long as, a month or two because of the limitations in collecting documents.
Okay, thanks. That's a good overview. We hear so much about ESG these days, environmental, social, and governance. And I know there's a misconception maybe that it only applies to big corporations, but really it applies to any and all businesses. Can you provide some insight into what we should be aware of in terms of ESG and compliance issues?
Sure. I like to define it at first that corporate governance is the practice of ensuring a business conducts itself accountably, fairly, openly in all dealings and negotiations. And it's not just the responsibility of the owner, it's the responsibility of the staff as well. So BDC expects that owners respect human rights codes, labor codes, the environment, anti-corruption standards, as well as engages in legal activities. The business does not directly or indirectly promote violence or sexual exploitation, incite hatred, discriminate on any number of bases: race, national or ethnic origin, color, religion, sex, age, mental or physical disability. And very importantly, it does not disseminate content that's sexually explicit. And a business should not have been charged, pled guilty to, or convicted of tax evasion or criminal offenses in any nature. So before you apply for one of our online loans, you have to go through a questionnaire. And if you're applying through a regular loan through an application, you have to answer all of those questions that must be signed off before we will even consider lending, Ryan.
Interesting. Okay. Well, thanks for that, Florence. That was great. I'll use this quick moment here to just quickly remind our viewers to send in any questions you might have for Florence, and we will get to them during the Q&A period. In fact, I'm looking on my second screen. I have a great one for you, Florence, for the Q&A, so we'll save that. But thanks again. Now we're going to move over to Constance. Hi, Constance.
Hi, Ryan. How are you?
Doing well. Thanks so much for being with us today.
Thank you for having me.
Great. We'll jump in.
Mhm.
Constance, our webinar is focused on financing. However, I know that Innovation Canada is involved in more than just that. Can you give us a quick overview of the key services you provide?
Yeah, for sure. So Innovation Canada is a subsection of innovation, science, and economic development at the federal government level. And it's really set up to support entrepreneurs and innovators to continue to do just that, to innovate, build, grow, and scale their businesses. And we do that in a couple of different ways. We offer funding programs such as the global innovation clusters, which was probably previously known to the participants here today as the super clusters, the Strategic Innovation Fund, and the Canada Digital Adoption Program. We also provide custom tools like the Business Benefits Finder, which we're going to jump into later, and BizPal, which helps business owners tackle the red tape like permits, regulations, or any license requirements associated with running their business. And all that alongside the advisory services like the Accelerated Growth Service for our work to support those entrepreneurs in navigating government programs and connecting with the right partners in that journey. So really, I mean, when we look at it across government at the federal, provincial, and even the municipal level across Canada, there are hundreds of government programs specifically set up for businesses, which can be really, really helpful when accessed at the right time. But of course, entrepreneurs and innovators, if they can't find them, they can't take advantage of them. So the Business Benefits Finder tool and my team at the Accelerated Growth Service, we were really designed and set up to help solve for that.
Okay, interesting. Thank you, Constance. I did hear you use the words funding and financing in your last response, and I know they're sometimes used interchangeably, but they're quite different. So maybe you could take a moment and explain what the differences are between funding and financing.
Yeah, for sure. So, I mean, at a very basic level, every business and every organization needs a certain amount of money to fulfill the requirements of that business. So, that requires capital like that ideally is going to be optimized from from these two buckets, funding and financing. And they come with different terms and conditions. So traditionally, when you think of funding on the private side, you'll think of a few things, either internally generated cash flow from revenue streams, investors writing equity or quasi-equity checks for a stake in your business. And then on the government side, you think of grants and non-repayable contributions provided to your business to subsidize or incentivize your business to carry out certain activities that the government want to support in the economy. So you think of the contributions that are available to companies who are doing ongoing R&D or IP generation or digital transformation in their business, or even exploring new export markets. And then on the financing side, you think of predominantly debt options offered by other financial institutions, and obviously my colleagues here on the line at BDC and EDC, and some other government agencies, which are repayable generally, but not always with interest. So Your capital strategy for growth should kind of include a mix of these sources. But one thing I do like to highlight to the entrepreneurs that I work with is that there are a whole host of other programs and supports that wouldn't traditionally fall into like the funding bucket because they may be non-monetary contributions. They're not going to come in the form of a check. But regardless, they can be really valuable and a big support to businesses while you grow. And this could be access to market research or advice on your IP strategy or cybersecurity protocols, or even advice on how to position yourself to succeed in a new export market. So I always encourage entrepreneurs and their finance teams to explore all options available to them in financing and funding to see what can be helpful as they grow, even if those supports don't always come in the form of a check.
Great. Thanks for clarifying. That's wonderful. So to anyone here watching the webinar and thinking, I need to find out more about Innovation Canada, what's the best way to do that?
Best way is the Innovation Canada website, so which I know we have linked in the resource notes. And this is where you'll find the business benefit finder, and this is really the best place to start exploring. So the business benefits finder is a pretty newly created tool which brings together everything the government has to offer businesses at the federal, provincial, municipal level, even with ecosystem partners and not-for-profits too. So if you go to this website and you answer a few quick questions, and it's really easy to use with some drop-down selections, you'll get a tailored list of supports that could be helpful to your business as you grow. And this is where you'll also see details of the Accelerated Growth Service and the advisory services that are available from our network of innovation advisors across Canada.
Okay, fantastic. I'm wondering if you could walk us through, I guess, a typical experience. So say I'm looking for funding for my company. I've developed compostable food packaging solutions.
Okay.
What does the search look like on the Business Benefits Finder?
Yeah, so it's a great question. So if you want to access the site on the web console here, you can follow along. But it was designed to be really easy, quick, and intuitive to use, kind of like a choose your own adventure story. So you complete a few statements about your business using those tools, those drop-down selections. So here for your business, Ryan, we start with the type of support and programs that you're looking to explore and what kind of activities that your business is currently focused on. And that could be building R&D, that could be selling internationally, increasing working capital in your business, increasing productivity, hiring or training employees, or even reducing pollution and increasing energy efficiency, which would be especially applicable in this use case. And then we would look at the sectors that you operate in. So for you, Ryan, we would add in that you were in the clean tech sector, in the business of manufacturing, more specifically in printing, paper, and wood. And then you add in how many employees you have, if you're incorporated, whether you're for profit. And then here, if you would like to self-identify as an underrepresented entrepreneur at this stage, you can. So this would be to see any programs that are available to women, youth, Indigenous peoples, Black Canadians, rural or northern residents, or LGBTQIA-led businesses. And then you're done. You hit the big green button at the end to see your results, and the system will filter out the options and present you with a pretty exhaustive list of any programs that may be available to you. And from start to finish, this should take less than 2 minutes to get there.
That's incredible. So, okay, so I've got a whole bunch of options. I've filled in the inputs in the tool. Now I've got a long list of options to consider. I guess I would say, now what? How do I get to the next step? Where do I go from here?
Okay, well, yes, there will be a ton of options. And they could be funding programs or financing options for your business, as well as tax credits that may be available to you, or access to research facilities, or wage or training subsidies for your employees, or even just opportunities around partnerships and collaboration in your field, and access to expert advice from innovation advisors like myself. So you can click through and get information about each of those options that's through the linked site, where you can figure out what the eligibility requirements are, what the application deadlines are, what the application looks like. And one pro tip I will share is that you can actually save your search and come back and reference it as you go along your growth journey. So you can get notifications for any new programs that come up that could be a fit, or changes to programs that you've already been looking into, and reminders about any upcoming application deadlines. So it's a really great feature that saves time, and it's a great place to start exploring what's available to you in your business.
Wonderful. Sounds great. I love it. Can you talk maybe about some of the funding programs that might be of interest to our audience?
For sure. Well, I will give a quick bit of an overview about the services that my team at the Accelerated Growth Service provides, and then I'll share another that may be applicable to participants today. So our team at the Accelerated Growth Service, we don't administer any funding programs, we don't write checks, but we work really closely with funding partners across government and help our client companies to navigate those government programs. So innovation advisors like myself and my colleagues work directly with high growth entrepreneurs and innovators to get a sense of their stage, their current needs and opportunities. And then we'll work with them to build a personalized growth plan, including those government services, programs, and supports that are going to be the right fit for them. And then we'll connect them into the right government partners as they pursue those opportunities. So we consider ourselves to be part advisor, part pathfinder, and all-around supporter for entrepreneurs and innovators. And then I think one other that I would love to highlight here, which was launched earlier this year, is the Canada Digital Adoption Program. So the Canada Digital Adoption Program, or CDAP, government, we love our acronyms. So it was launched earlier this year, and it's there to provide funding to Canadian SMEs to support their ongoing e-commerce upgrades and adoption, alongside any internal digital transformation activities. So there are two streams depending on the size and stage of your business. So this program can come in the form of a micro grant of $2,400 to be used by your business to support e-commerce projects like updating or improving your website or e-commerce path to purchase experience. And then for more mature businesses, if they're eligible, they can access up to $15,000 of a grant to offset the cost of working with a digital advisor to build a digital adoption plan for their business, as well as getting up to $7,300 to bring on an intern to support that work. And it's a great program, which is made even better by the partnership with BDC, who've joined us in offering the participating businesses access up to $100,000 with a 0% financing interest rate to implement that digital adoption plan. So definitely one to bookmark and take a look at.
Very interesting. Thanks kindly for that, Constance.
Thank you.
Great. Just a reminder again to the audience, you will find a link to the Business Benefits Finder and other programs in our resource document. And please do keep the questions coming in. I'm looking over to my right, and I've got a whole bunch of great questions, which again, we'll get to in the last 15 minutes of the program. So thanks for sending those in, and please continue to do so. Next, we're going to move on to Amanda. Hi, Amanda. Great to see you.
Hi, Ryan.
Great. Hi. So I mentioned earlier that EDC works in partnerships with banks. Maybe you could spend a moment to speak a little bit about that.
Yeah, of course. When I think about our partnership, really, it's EDC's job to make it financially easier and safer for Canadian companies to do business in international markets. We've developed solutions that help banks support companies' international growth because, frankly, to a bank, international growth is more risky than domestic growth. We can provide guarantees to banks if they loan to companies expanding internationally. We aim to take on a large part of the risk so they in turn can provide more working capital to you. I'll go in a bit more detail in just a moment, but that's essentially how we work together.
Okay, very interesting. Great. Looking forward to getting more detail on that. Now, it may be obvious to us working for Export Development Canada, but not everyone understands what an exporter is or does. So maybe you could help, I guess, define that term.
Yeah, Ryan, I love this question. Actually, I love it so much. I just wrote a blog on it. I think when we're talking about exporting goods, things that we can put on a boat, truck, or a plane, it's so much easier to say, yes, I'm an exporter. The destination where the goods lands really just confirms that for us, but it's so much bigger and broader than that. Service and technology businesses are just as important. The way I like to explain it is to think about exporting your knowledge or exporting your expertise. Even though all of this brain power is exerted here in Canada, the way I often uncover this in conversations is to ask companies to take a look at their invoices and check exactly who they are billing. On several occasions, we found that the invoice is being issued to a US or maybe European parent company, and you never know, you might already be exporting and you didn't even know it. At EDC, we also recognize that many companies are what we call indirect exporters, those who support the supply chain of export. The easiest example I can think of is within the automotive industry. We know that Canadians cannot buy all of the cars that we make here in Canada, but companies who are supplying to either OEMs, tier ones, or tier twos can qualify as indirect exporters who can then benefit from our solutions and services. Finally, I'll say that if you have a contract or a PO in hand and you're planning to export in the next 12 months, it's a really good time to start the conversation with EDC. We may be able to support you even as a future exporter.
Interesting. That's a good, comprehensive answer. I like it. So there's a lot of EDC solutions, and we've included links to many of them in the resource document. But Amanda, maybe you could start by walking us through one that's likely the most relevant and helpful to the majority of businesses.
Yeah, so anyone who knows me knows that I have a very special place in my heart for credit insurance. I think everyone should have it, but I'm going to break it down to 3 reasons why I think it's so important. So, number one is that typically accounts receivable are the largest asset on a company's balance sheet, and that means they should be protected. Foreign receivables, even those that are just in the US, are inherently more difficult to collect on if they become overdue. You just don't have the luxury of driving down the road to talk to somebody in person. With credit insurance from EDC, you're able to recoup 90% of the invoice value in the case of non-payment. I know many of my clients have called their sleep at night insurance, knowing that they have the peace of mind of being protected by a AAA Crown corporation. We've got lots of different ways that we can cover all, some, or even just one of your receivables. Now, the second reason I love credit insurance is because it's an amazing sales tool. We know that 80% of international trade is done on open terms. On our insurance portal, with just a couple of clicks, you can gain an understanding for how much and what payment terms EDC is comfortable covering. Imagine yourself confidently being able to sit down at the negotiating table with your client, knowing that you can offer longer payment terms than your competitor. And little bonus here, when customers are offered open terms, they actually spend about 40% more. Now, what happens when you lock in all these sales? Probably your next call is going to be to your bank, which brings me to reason number 3. I recommend credit insurance to every company. It's peace of mind for your financial institution. With EDC credit insurance in place, they know you'll get paid. It makes it less risky for them to support you, and they can even increase the amount of money they lend against your accounts receivables.
Interesting. Okay. It's a great segue, a perfect segue, actually. So outside of credit insurance, which, indirectly can increase your working capital, any other ways you want to walk us through in terms of, getting access to working capital, needed working capital?
Yeah, of course. I've got a couple here. So I'll say we do have some really awesome ways that we partner with our banks. The next most common way that we do this is through our export guarantee program, which is essentially a guarantee on a loan. There are so many ways that this can be used, whether to help fund costs for an upcoming export contract, maybe to purchase some capital equipment to grow your business into new markets, or even open an international manufacturing facility or sales office. Honestly, the possibilities are kind of endless with this. Now, I'm going to give a quick example of how this works in real life. Recently, I worked with a company who needed support on a contract that they had in the US. They'd lost some business in the US during the pandemic, but were rebuilding their pipeline. They were able to fund some of the upfront costs through the cash in the business, but had approached their bank with the projected costs they needed to cover. Their bank was a little tentative because of how the company was impacted over the past few years, but they were feeling hopeful because they had done some of this work in the past. The bank approached EDC to provide a 75% guarantee. Now, what does that really even mean? It means in the worst case scenario, if the company was not able to uphold the agreed upon terms of the loan, the bank could submit a claim to EDC to receive, in this case, 75% of the outstanding amount of the loan. We also have what we call our trade expansion lending program, which is why I'm going to use this acronym, TELP, that is very similar to the export guarantee program. The main difference is that it's more standardized and the banks can administer this at their own discretion. It's most often used for standard operating lines where a client is already exporting or will be exporting in the next 12 months. If a certain set of criteria is met, then your bank can put this into place without EDC having to perform its set of adjudication. We work that well with them and have a great level of trust for the process they go through with our mutual clients. It is a win-win-win since the bank can mitigate their risks, you can get your EDC guaranteed loan sooner, and we get to fulfill our mandate of helping Canadian exporters. Finally, there might be some times where your bank may ask you to post cash or hold collateral against letters of guarantee or foreign exchange facilities. In these instances, we can provide your bank with 100% guarantee so they don't have to ask you to post this cash or freeze a portion of your operating line. I know you mentioned, Ryan, that we've got some links in the resource document. So if this is a scenario that you've experienced or you're kind of thinking that this might be on the horizon, I'd encourage you to review these resources and then contact us to get the conversation started.
Fantastic. Thank you, Amanda. Last question. We're pretty good in terms of timing, maybe a minute behind, but I was hoping you could give us an example of a company you've worked with over the years and how EDC solutions have helped them grow.
Perfect. Yeah, I was going to say that's really actually the best part of the work that I do is I get to see a lot of success stories. I could probably tell 100, but I'm just going to choose one since we've just got a couple minutes left. There's a company that I work with. I've been working with them for about 5 years, and they're going to be celebrating actually their 10-year anniversary with EDC pretty soon. They sell a variety of sports and health equipment, and Walmart has always been their largest clients. Now, we know that Walmart can move some serious volume, which is great, but this can pose some challenges when you have to pay your suppliers up front. And this was their major issue for them, especially when they received their orders for Black Friday. Every year, the volume for the regular orders plus the Black Friday bulge would be outside of the typical scope that the banks would lend against. What EDC and their bank did together was use our export guarantee program that I mentioned earlier. The operating line was set up where we could submit the purchase orders and they could get the funding based on those costs. The accounts receivable from these purchase orders were then dedicated to paying down this line of credit once they were paid by Walmart. That started around 60-day payment terms, but it started edging up to be around 120 days. But regardless of the terms set by Walmart, this structure enabled the client to pay their suppliers upfront without having to worry about negotiating open payment terms with them. Every year, the size of the line increased to support the orders, and our guarantee increased along with it. Some years we had to add in some extra support through factoring, but incrementally increasing the amount each year, now the bank is comfortable supporting the volumes that Walmart is requesting. Over the pandemic with the gyms and all these sports programs being closed down, there was such a huge need in the market for their product line. I am so proud to say in the time that I've worked with them, they've grown from an $8 million company to a $50 million company.
Wow, that's impressive. Great story, Amanda. Thanks so much for sharing. So now that we've finished asking our panelists questions, it's the audience's turn. I've got a whole bunch of great questions here lined up. I'm going to try to do them. I'm going to try to have questions for all three of our panelists. What I would say, if we don't get to your question, no need to panic and no worries. We will follow up with you after the program. So I'm going to ask questions in reverse presentation order, just to mix it up. So Amanda, you were last to present. I'm going to put the first question to you.
Sure.
And I'm going to read it here. It says, my company has been approached by a company located in Hong Kong. They wish to negotiate a large order of my products worth 100,000 euros. My company is small. This would be the largest order that we have ever received and will require us to develop some scale in order to deliver. Question, can I use the order to get financing to help fund the order for raw materials and equipment? And how do I verify the legitimacy of the company buying from us?
Well, I was going to say that's perfect because actually the example that I gave, that was exactly what that customer had done. They had set it up with their bank. So I think that's always kind of the most important first step, is getting all the people around the table. Get all the partners that that you're going to have to speak to really around to talk about this, talk about the way that you expect this contract to really work. Now, to the second part of your question, I think Florence had mentioned earlier that yes, fraud is it's a big thing these days. And we always want to make sure that we're selling to people who are really legitimate. Now, the other benefit that you have with the EDC credit insurance is that portal where you go on to check if we can support. We are doing due diligence in the background. We're making sure that these are legitimate companies who will be able to pay you back. And that's how we really establish our comfort level. So I'd definitely say being able to even just cover this contract as a one-off is a perfect way to, kind of do this little background check on them as well.
That's great. Thank you, Amanda. We're going to move on to question 2. Constance, this one's for yourself. Is there any funding available for a startup with zero sales within the software service industry?
Okay, so it's a great question. It's something I hear a lot, and I'm going to maybe not. You may not be super happy with the way I answer it, but the way I'm going to think about this and the way I'm going to answer it is without knowing a little bit more about your business. I don't know what you may or may not be eligible for. And really the way I would encourage you to think about it and approach is break out the activities within your business that you are allocating time, capital, resources to over the next 6 to 12 months. So whether it's protecting the IP that you built in the business, whether it is hiring developers or hiring sales and marketing, or whether it is building out an export plan for growth, or even just doing ongoing R&D. So there are multiple programs that will either help with the contribution or with expert advice, which should be able to reduce some of the costs that you're going to incur with that. So I would say if you actually use the business benefits finder to identify what you're looking at doing and get a sharp view on exactly where your key focuses are for activities within the business within the next 6 to 12 months, then it'll be much easier to identify the programs or supports that are going to be a fit for you right now.
Okay, thank you, Constance. Florence, I've got a great question for you, and you spoke to it earlier, but it's so relevant. I've got to ask this audience question. So, why, when a company is incorporated, so we'll call this company a prospective borrower of BDC, why, when a company is incorporated, does the bank attach approvals to personal financial picture, presumably of the owners? So.
That's a beautiful construct that was built back in the 70s when companies started to incorporate. What could happen is that companies were originally seen as a separate legal entity. So what some of these clever entrepreneurs would do is go out and set up an incorporated entity, borrow all sorts of money, declare bankruptcy because they didn't have a personal hook. Well, your lenders, including your chartered banks, our good partners, are clever enough to know that if you're benefiting from it, this is your business, you're going to have a personal hook. Right now, if I'm financing something that I have tangible security on, like a building, I may only take a 15% personal guarantee. I may take a smaller guarantee, but we have to have something as security.
Understood. Thank you. Next question. This is a tricky one, Amanda, but I'm going to pass it to you. It's very specific. So
perfect. Those are the best questions. They're they have a lot of meat on them, and yeah, we can dig right down.
Okay, so the question is as follows. What product developments is EDC working on to provide direct buyer financing in challenging markets, i.e. Cuba, Guyana, Trinidad, and Tobago, where the customer is the government. So again, question about us, EDC financing buyers in challenging markets. What about receivables insurance, where repayment terms can be up to 360 days? So two-parter.
Yeah, I was going to say there's a lot in there. So, I mean, we've definitely got several different ways that we can always kind of, I'll say, attack, what clients needs. I think that's always the important part about starting the conversation early, is to say, okay, where do we have some give and some take in here? Certainly, the more time we have, the more we can discuss. And when we start looking at some of these really long payment terms, the more time we have to research your customer, gain an understanding, see if this is kind of maybe a standard type of documentation that they normally do. If you're working with, say, a larger company, maybe we've already heard about them. Maybe we have a bit of corporate knowledge about how they've worked in the past. But I think what was very interesting about this question is talking about working in really difficult markets. Now, there are some countries that we cannot do business with, and that's not necessarily a business decision by us. That's also our collaboration with the government of Canada. So when we have companies that have countries that have sanctions against them, then really we're also trying to make sure that we're protecting you on the front end as well. The world is a really large place and there's a lot of good business to be done, but we want to make sure that we are kind of directing you in that place. The other resource I would say in this scenario is we might collaborate with, and I'm forgetting what the acronym stands for, but the CCC. Sometimes there are possibilities where you can sell your contract to a government and a Canadian government entity, and they can help along that way. I'd say it's probably less common. It's not something we see every single day, but again, getting all the people around the table will help us to figure out what the terms and conditions are going to be and whether this is really feasible. I'll say maybe the final point on that is taking a look at what industry that is. Constance is sending me a message, the Canadian Commercial Corporation. I knew I was going to invert one of those words, so thank you so much. But also taking a look at the industry. Florence had mentioned about ESG, and we really want to make sure that whatever type of contract we're supporting you on is really going to bring benefit to the people in those markets as well. Did I miss any parts of the question, Ryan? Sorry, I know it was kind of a two-parter. So if there's anything I've missed, I was going to say I could still continue to clarify.
No, I think that's a good starting point. But what I would also say is that contact info is provided for things that are very specific in nature. If you don't feel that you were answered as completely, maybe it's a better discussion. By all means, reach out to any of the panelists for further info. So thank you, Amanda.
Thanks.
Next question. I've got another one for each, Constance and Florence. Florence, I'm going to start with you. And the question is simple. BDC and factoring. Yes, no, how?
Factoring, did you say?
Yes, correct.
Not in my world. No, factoring is, there are a number, and one of the reasons we don't provide financing for that is there's a lot of great lenders in the marketplace doing that. It's as simple as that.
Maybe you could just
simple.
Yeah, no, thank you, Florence. And maybe for those who haven't heard the term, you could really quickly explain what factoring is.
Factoring is when you sell your list of receivables to someone and they collect on your behalf. Sounds a little bit kind of collection agency-ish. A sale isn't a sale until the money's in your pocket. So you really have to be prepared to chase your receivables and be very confident about the terms and conditions you have on extending credit, because when you allow someone to pay on terms and conditions, 210 net 30 days, 60 days, due upon receipt of invoice, you have to be confident in them and you have to enforce them, because you are not the bank. It's very expensive to finance someone else's purchases from you. So there are lenders out there that do it. Unfortunately, we are not one of them.
Very clear answer. Thank you, Florence. Constance, this next question is for you. Are innovation reps available for one-on-one personalized discussions? Entrepreneurs don't always have the time to keep searching.
Yes, for sure. That's exactly what we're here to do. And that's why we are a part of the Accelerated Growth Service. So our innovation advisors are right across Canada, and the link to our website for the Accelerated Growth Service should be in the resource links, and if not, we'll make sure that they're included in the one that gets sent out after the webinar. But you can go online and you can find all of our team right across Canada, in all the provinces and areas that they work in and geographic kind of distribution. And you can connect directly with us. So you can click on the innovation advisor that is relevant to your region where you're doing business, and shoot them a note and connect with them that way. Or you can reach out to our call center, and I'll make sure that we have details of that for you as well. And they'll ask you some triage questions and get you in touch with the right person.
Wonderful. Thank you, Constance. Amanda, I've got there's several questions on the same theme. I'll ask one of them. I'll read the question. Can you clarify the export definition? Where I export potentially billions of dollars of equipment and services to foreign countries as a part of a project, would that be considered an export? So selling into a project, it sounds like.
Yes, that's perfect. Thank you so much, Ryan. Yeah, so that was more of what I was mentioning about the indirect export. Typically, when there's some pretty large projects going on, EDC does try to catch wind of them so that we can know, okay, this is something that we're going to want to pre-approve in advance. So we're going to be prepared when you call to say that, yes, we're going to participate in this. This is how much of our, here's what our contribution is going to be, and here's how it's really going to bring the project forward.
Okay, thank you, Amanda. Looking at the time, I think we have time for one last question. Florence, I'm going to pose this one to yourself.
Certainly.
Is it better to create a business plan before talking to an EDC or BDC advisor?
No, create your plan in advance. It helps you organize your thoughts. And when you get time with your advisor, you want to be able to take advantage of that time efficiently, right? When my phone rings, I answer it. I don't let my phone go to voicemail unless I absolutely have to. I want to talk to you about your project, but you've got to answer a lot of those questions first yourself. You've got to do the heavy lifting.
I would agree. I was going to just pop in there quickly and just say that, I feel like when you create your export plan, it's kind of like a net. It's not going to be, there's still room for stuff to get through. And, if you can send that to us in advance, then we can actually spend some time doing our evening reading as we do. And, ask some more questions of, maybe you've missed this, maybe you kind of had that. And we can actually take it to some of our other colleagues. I know BDC and EDC, have been a part of what we call the Trade Accelerator program, where there's a lot of mentorship there. We can, connect with those colleagues as well and make sure that, everyone kind of gets their opinion in and make sure that every kind of risk is going to be fully covered.
Wonderful. Thank you. Well, looking at the time, I appreciate all those answers. Unfortunately, that brings our program to a close. I can't thank you all enough, all the panelists, for joining us today. And to the audience, I truly hope that you found this webinar useful and helpful. Just a huge thanks to all for organizing this. We'll be sending out a survey tomorrow morning requesting your feedback on the program. And if you do have the time to respond, we'd really appreciate it. The only way we're going to get better at this is hearing from you, so please don't hesitate. Our next webinar will deal with the benefits of Indigenous partnership, and that'll be broadcasted on October 27th. I hope you'll join us then. In the meantime, if you have any questions, please don't hesitate to give us a call at 1-800-229-0575 to speak with one of our trade advisors. Until the next time, enjoy the rest of your day.